Hi everyone, it is September 8, 2022, and you're watching the Awesome 10X Philippine Market Update. Let's begin first by checking what the markets have in store for us. Let's take a look at the Philippine markets. Okay, let's read through the index. So you've got the market value today trading at about 2.5 billion pesos. That is still very small. And yet you can see that there are some gainers and some decliners. 93 advancers, 85 decliners. Let's just read through the index here. URC is trading at 129, SM 845, Jollibee 248. You've got SM Prime 36, BDO 125, Monde 16.1, Wilcon 29, Emperador 20.75, Metrobank 52, Ayala Corp 707, Aboitiz Power 31.4, ICT 182, San Miguel Corporation 97.5, Luciatan Group 885, Asen 7, BPI 95, Converge 17, AGI 9.6, GT Cap 492, Aboitiz Equity Ventures 58, Globe 2136, Semirara 41.4, Mega World 2.34, MPI 3.75, JG Summit 50 pesos, Robinson's Land 18, Pure Gold 33.7, Meralco 312, PLDT 1660, Ayala Land 27.9. Based on just looking at the index, what is impressing me for a potential lookout to watch is the index dividend names. Your PLDT is now trading at 1660. Your Globe is now trading at 2,136. And if you take a look at the dividend yields of those two companies, it looks like both of them have a significant 4 to 5% div as well as Meralco. So amongst the index issues, I think the value might be in the dividend place still, where Globe, PLDT, and Meralco seems to be giving a rough 4 to 5% dividend at these levels. So also, let's just take a look at the market supports. Okay, before I discuss the anomalies that we are looking at the small caps in the Philippines naman. So far, PSEI has been hovering in a consolidating manner. This is your Philippine index, and it is looking to just consolidate, peaking at about 6.8. It's now trading at 6.5. You've got some buyers here at 6.4 and 6.3. And although we think that there remains a lot of expensive areas in the Philippine market, there also are very cheap opportunities as well. In fact, we will be discussing 1 times PE ratio. Totoo bang may ganun sa Pilipinas? And it seems as if there seems to be some companies in the Philippines trading at an aberration. So, okay, let's just take a look. All right. So it looks like the index is getting high or being higher because of your big names. Your SM was able to go, sorry, not that SM. That is SM Energy, although I do like SM Energy in the US. SM Investments has traveled from about 750 all the way to 875, and it is consolidating. And it looks like in the short term, it seems like SM Investments managed to actually make a bottom here at about 750, such that any dips of SM is likely to be bought. At the same time, it's just trading in a range, so not to get your hopes up. It looks to be within a range from about 750 to about 900 pesos. That is a 20% range. And likely that the way that it ranged, it made a trading range from about 4 years already, 2018 to 2021. Chances are for 2022 to 2023, it's also going to trade within a range given that most of the problems remain in play. The problems being consumer spending, and not necessarily it will trickle down to a loss of consumer spending. But that is still a concern. Therefore, you will see healthy sideways action in your SM. So I said that in the index, it looks to be that PLDT is actually giving a good entry point because PLDT here at about 1600 areas is in the support zone. So PLDT here was never really falling below 1600 since the last maybe about a year already. From September 2021 till about September 2022 today, we have seen PLDT roughly trade between a 1600 area to about 1900 area. So from looking on the index, it looks like I would be suggesting a buy on the index support area for PLDT here, whether 1660 falls 1610. This looks to be an attractive play given the dividends that they are giving. No? So they've already given 75 pesos. That was already paid September 5. You'll notice they also gave 42 last March. So that was a very huge dividend for March and August. they are expected to do that, no? So this year, this was an extra generous effort from PLDT standpoint, and chances are, even if next year it's just going to be about 70, 80 pesos out on two dividend dates based on March and August, what we can infer is that since there's dividend investments, this will always be treated as a dividend income stock. So for dividend income stocks, we would expect any dips from 1600 all the way to 14 or 1500 to all be a great buying opportunity. So for those who have extra cash out there and you want a dividend income stock, we would continue to promote PLDT. Now let's take a look at Meralco here, because Meralco seems to also be trading here at a very good dividend area. With the index actually at about 6.5, we are seeing actually Meralco back towards that September 2021 arena, which is back towards that 290 or 300 area. So I'm looking to see an entry support here because there's a lot of buyers here. That is a good support area. It might not hit 300 pesos straight, but if you're buying 312 all the way to about 296 or 300, looks good. For dividend income or passive income strategies, we do see that the dividends are very straightforward. So Meralco has been paying consistently since its lifetime. You can see that is 5.8. This is the 10 peso. They will pay this again, 5 pesos, 7 pesos, 5 pesos, 10 pesos. So in general, everyone expects that Meralco will be paying roughly 15 pesos. So you wait it out. Every year, you're getting paid. So let's assume that you held your Meralco shares from 2015 till 2022. That would have been 7 years times 15 pesos. You would have you would have gotten something like 70 plus so about 100 pesos in terms of dividends over that last 7 years, as well as well, this was just a bonanza, not really a bonanza, but more like a happy thing that it also managed to be outperforming your index. And actually, most of these utility firms are generally speaking giving about 6 to 7% CAGR. So categorically speaking, it is still a buying area whenever it falls between 290s or even 300 below. So actually, starting 312 all the way to 260, you should consider perhaps buying somewhere at these arenas. Okay, so Globe, let's just take a look as well on Globe. So these are the top 3 utility firms in the Philippines that are well known, not necessarily the highest dividends, but we like it because it has been consistent, i.e., for the last 10 years, for the last how many years since existing, it always managed to pay that decent cash dividend. So for Globe, they actually paid 20 pesos every quarter, 27 here, 27 here, 27 here, 27 here, same as last year, no? Panay 27 pesos. So it's a predictable cash flow instrument for everyone who is replacing bonds or just basically wanting to have a passive income. So it doesn't matter if it doesn't go up. So for PLDT and Globe, we assume that it will stay the same. From about 2.1, you would be probably seeing it at 2.1 and 2.1 for infinite 5 years or 7 years. Sometimes it will go up or down. Sometimes you can sell at about 2.4, 2.5. Sometimes it goes 1.9, 1.8. But every time you can see that for the last 7 years, Globe is just a passive play wherein you do get that 100 pesos. So that means that if you held your Globe 2.1 for the last 7 years here, 2.1, your cost would be 2.1 here and your cost today is the same. So same price, but you receive alternatively that 100 peso cash dividend every year. So those who are buying Globe, PLDT, or Meralco should understand that these are passive dividend investments and they should not be treated as a trade, but really more like an investment. And that's really how Globe, Telephone, Meralco will make your money work for you. Now, in terms of anomalies, let's just begin to talk about anomalies. So a few of the anomalies that I've been noticing is Mrs. G. So let's take a look at the Metro Retail Stores Group. So Metro Retail Stores Group is trading today at 1 times PE ratio. And we can take a look on the edge. This is how you do that. Let's take a look at the edge and then let's take a look at Mrs. G. We're uncovering anomalies here in the Philippine markets, particularly because Mrs. G is a very small company. You can notice that this company, Mrs. G, has sales and has income. And one of the ways to see that is simply to go to edge.psc.com.ph. One thing that you can first check out is the press releases. So this is August 12, just a month ago. So here I'm gonna just read it out loud for you. It says here that Mrs. G or Metro Retail Gaisano posted a strong recovery with a 200 million net income in the first half. This is a reversal from the net loss last year of about 180 million. This was brought about based on the strong performance of easing of mobility and reopening. To further strengthen the company's footprint, Mrs. G is opening 2 new stores, Paseo Supermarket in Cebu and Metro Hilonggo Supermarket in Leyte. The company has decided to also close in one non-performing store last April, bringing their current store network today to 62. The positive results is a strong trajectory given that the company has 40 years in retail. It says here that the company posted 9 billion pesos of sales in the second quarter of 2022, already 30% higher versus 2021. This was brought about mainly as people are going out for the reopening of the economy, consumer spending is getting buoyed, with food retail and general merchandise businesses growing a good response, 24%, no? So comparable same-store sales is 25% growth. You've got the business growing 20 and 44%. So as a company and retail sector going up in the Philippines slowly, so we could say that over the last year, between 2021, buying it 2021 here around September, it was around 1.38 as well. This year, 2022, it is still trading at 136, 137, 138. One thing that you can notice here is that all throughout, Mrs. G, since the pandemic from March 2020 until today, has barely gone up from about 1.2 to 1.37. And we believe that this is a function mostly of a strong buyback program. So take a look that there has been a lot of buybacks. On August 10, 2022, you could see that Mrs. G cumulative number of purchases purchased to date is 133 million shares. So before, they had 3.296 million, 3 billion 296 million, blah, blah, blah. Of course, they also have treasury shares. Because of the cumulative buyback program, therefore, the shares of the outstanding will be lower. In this case, this was lower by 80 million. And in this case, their treasury rose from 233 to about 307. So after these cumulative number of purchases, this 3.3 billion shares today could become 3 billion shares. So they plan to actually buy 300 million shares of, not 300 million shares. They plan to buy 300 million pesos worth. So far, it seems as if Metro Gaisano cannot be gotten at 1 peso. And so the company has bought roughly an average of about 1.4. So you can see that the total amount of shares purchased is 188 million. It will take about 120 million more to finish the buyback program, which in my view would take roughly another 6 months. So why do we say that this will take about 6 months more of accumulation? Well, we can either 6 months or less because we can see that the total buybacks are being done naman on a cost averaging manner. So we can see that Mrs. G bought 200,000 pesos shares here. And then that is August. Then in July, they also did the same. Look at July. Share buyback program, yun, 500,000 pesos worth. 500,000 shares at 1.45. We can see the same thing happen during June. So let's just take a look this month on month. So every month, they have been buying a lot, buyback programs. This is 1 million shares at 1.44. And then even on May. So let's just go through all the disclosures of Mrs. G. So May buyback. So let's just read through like just the disclosures. Look at it. So you can see that it kept on buying back. And so their treasury shares kept on rising and rising. So for those who aren't aware of buyback programs, a buyback means that you are increasing the treasury shares and you are decreasing your outstanding shares such that when you divide your earnings per share next time, naturally your earnings per share will go up based on the fact that your denominator instead of 3.3 billion would roughly become 3.1 billion or 3.15 billion. So roughly, it seems as if the company can buy, if it's 300 million pesos divided by 1.45. So just get your calculators here. Let's take a look. So sa pathang divided by 1.5, it's sa puto ng pathang share, di ba? So approximately 200 million shares. They've already bought 133 million, so roughly 60 million shares to go. Okay, so we can see that they've been doing this. So this is your 2022. You go back to history, you can also see the same thing. They have been doing this buyback since 2021, all across the board. You can see December, November, October, September. As of the last November 20, di ba? So during the pandemic, they started losing some money, but in 2021, they did all they can to buy back. So, 2021, it's been a buyback program month after month after month. And it can be evidenced, seen here, 2021. Since 2021, it looks like it's been trading within a tight band from about 1.23 to 1.43, suggesting to us that this entire low volume is really just an accumulation all throughout for the company. And when insiders are buying, it is usually a good sign that this is a business that is worth having. Let's just go through why Mrs. G may be an attractive anomaly in the Philippine market. All right. So how do we do that? Let's just go through let's go through their company website. Let's go through that together. Let's just go to Mrs. G Investor Relations Program. Okay, so for those in the Philippines, you may be aware of what Mrs. G does. But for those who aren't in the Philippines or have not known about Metro Retail, then let's read through their website. So they are a retail store with about 60 store networks today. They are headed by Mrs. G President and Chief Operations Officer Manuel Alberto. They recently opened in another two stores, no? So for the second year na no row, and matagal na sila dito. Metro Supermarket Ayala Center Cebu, honored with the best grocery by Sunstar Cebu. Okay, so they are a very loved brand in Cebu. Okay, lot of excellent congratulations, Food and Safety, Metro Lucena, #1 taxpayer of 2021 by the city government of Lucena. Okay, so this is what they have, news highlights. So this is the retail profit that we are seeing. They opened their 63rd store in Leyte, Metro Supermarket Hilongos. They opened their 62nd store, Metro Supermarket in Banawa, Cebu. Let's just go through and read the headlines here. Okay, so corporate brochure, let's go through this as well. Open link. Kahit just browse through the websites to know more about the company. Okay, investor relations, presentations, open that, annual reports. Okay. So you can see that their business is a retail-oriented segment wherein it's food and it's mga department stores. So it's a department store and supermarket. What is an anomaly here is that it is trading for only 1 times PE. So that is quite an anomaly. By 2025, we want to be an agile retail-based company, best-in-class customer experience through operational excellence. Okay, so since it's very small, it's 62 stores, we have to compare the valuation of Mrs. G towards other businesses that are also trading in the market. You've got All Day, which is another supermarket in the Philippines. It's trading at 30 cents, but you can see that it has so far. This one is a little bit expensive. This is 20 times, parang above 20 times multiple, or less than 20 siguro. I can't remember. Basta nasa 20 times multiple tong All Day. It's not yet a single-digit PE name. Okay, so let's take a look at this. So this is the Gaisano Metro was renamed Metro Gaisano. This is the family, the second generation Gaisano siblings. So Victor Gaisano has proved that good products can go so far. Victor and Sally has a strong so the family. In 1982, Victor and Gaisano and his wife Sally built the very first Gaisano Metro department store and supermarket in Cebu. They started this business from very humble beginnings with children Margaret, Jack, Edward, and Frank. So apat na anak. So the father has already passed away. So nandito sa painting, si Sir Victor, and this is Ma'am Sally. These are the kids. You've got Margaret, Edward, Jack, and Frank. Eventually, they grew the company and it's now 62 network. Okay, Frank Gaisano is the chairman and CEO. serving as a company's director from 2003 and to 2011. All right. Manuel Alberto is the president and COO. We can see that. He's a seasoned retail executive. Over the years, he worked for 2 decades with Philippine Family Mart, Rustan Supercenter, Avon, Jollibee Foods Corporation, to name a few. Okay. Store formats. All right. So you've got all the stores. So they are a one-stop shop for furniture, for cooking, wear, travel gear, and food. So department store and supermarkets. Okay. Super Metro. We can see the formats here. They've got ancillary businesses. So they serve food just like all the supermarkets in the Philippines as well. Swiss Cottage, Baked Breads, Metro Cafe, Metro Pharmacy. Okay, so the thing about this is that they're considered usually as a small company. But that doesn't mean that this company is not necessarily to be ignored upon. So let's take a look at the second quarter and also how they actually are recovering from 2020, 2019. Let's take a look at twofold, 2019, 2020, 2018 performance. The company has had a lot of difficulties, and so we will go through the difficulties. 2018, they closed Ayala Cebu. Total sales increased only by 8%. Go forward, you can see that their net sales, 34 billion, 35 billion, 33 billion. So roughly in the 30 billion pesos scene is their sales every single year. And you can see that as well, even for 2022. For 2022, you can see that their sales here is already, okay, tingnan natin. Net income improved to 200 million, EBITDA improved 1 billion, profits grew 3.5 billion, net sales so far is 17, which is roughly the 34-35 billion that the company usually has prior to the pandemic. Supermarket, 58%, hypermarket, 22%, department stores, 20%. So a big bulk of that 35 billion every year, or 60% or 20 billion is roughly groceries, okay? 62 stores, 34 are supermarkets. Then they've got a department store and I think HMS hypermarket. Okay, so market cap is 4.7 billion as of June 30, 2022. They see their total assets at 2.5. Their current share price is 1.4. And although the earnings per share is just first half, they are already seeing 7 cents. So nasa 10 times multiple, although I would argue it's not really 10 times PE because the company has significant cash. Let's take a look at the results as well before we go through the ratios or the PE ratios, etc. So net sales has grown. This is a great sharp recovery owing to improved consumer demand, higher foot traffic. All right. As a result, of course, excluding the store that was damaged by Typhoon Odette in 2021. Agree. So gross profits, manageable. Their margins, okay, gross profit margin is above 32 basis points this year as a result of improving efficiency. Operating expenses also declined from 21% to 18%. Good job on the OPEX. Okay, results of operations, EBITDA. All right, so growth, diba? 1 billion pesos so far for first half 2022. They have recovered from a loss to a positive income so far for 2022. Comparable sales grew, results of operations. So everything that you want to see has been shown. Growth in supermarket sales, recovery in department stores. So this is owing to the fact that very low industry base from last year. These are their existing stores, a total of 62. They opened just the other one. So 63. Okay, department stores. NCR 3, Luzon 4, Visayas 8, total of 15 malls, department stores. They've got 34 supermarkets, a big portion in Visayas. Hypermarket is 13, 4 in Luzon, 9 in Visayas. Okay, so this is a largely Visayas. New stores in Cebu, new stores in Leyte, pipeline of stores. So they're opening Metro Catbalogan in Samar, Metro Alang-Alang in 2023. So we can see that they're using their cash flows to keep on building. At the same time, they are doing more e-commerce capabilities. They have a partnership with GrabMart, Pushcart PH. Here, there's Metro Pabile. You can just call, text, or Viber, Pabile, and pay, deliver to your door. So stronger shopping omni-channel areas for their clients. Key financial metrics. So medyo nasa 30 billion yung 2022. This could recover to 35 billion. So net income might not be as high, pero we can project nasa mga 400 to 500 million for this 2022. That would still be below the pandemic 2019, 2018. You can see the indicators here. But so far, the company has very little debt. So the debt to equity ratio, although they're expanding, it is manageable. Very strong cash flows. You can see that their current ratio of cash starting from 2 na naging 1.45, they beefed up their cash resources. This 2.62 here is actually 3.9 billion pesos of cash. So that is a very strong cash area for Metro Gaisano. You can see that the share price, while it fell from 2018 to 2022, however that may be, from an 8 billion peso company to about 4 billion, looks like the company has actually been recovering. So this is a story of a recovery. Okay, what else could we say? So the reason why I mentioned that this company looks to be a one-time PE ratio is largely because if you strip out the current market cap from their debt, which is manageable naman, actually, usually, dapat enterprise value. Pero pwede na rin, roughly, the 4.4 billion ngayon, yung market cap. At 4 billion market cap, tanggalin mo yung debt. So 4 billion minus the cash, and they can have an income of about 400 to 500 million. Easily, kaya nila yan. 2023, you're looking at about 1 times PE ratio. Whether it's 1 times or 2 times PE ratio, this is quite an anomaly, given, as you said, this particular company can usually trade at the very least back to this 8 to 9 billion market cap. So from a pricing area, will 4 billion roughly double your money within about the next 2 to 3 years? And the answer may be a yes. So this is not gonna be a 10x name. Nonetheless, can it hit about 2 to 3 pesos if you're buying with the company in their buyback program of about 1.4 area? And I think the answer is yes. This is good for people who are looking for some stable names. What I like with Metro Gaisano is we can see that the business is stable. It has been in existence for the last 40 years. And you take a look at the statement of financial position, So you've got the total current liabilities, 3.80 billion, total non-current liabilities. So usually ito lang yung titingnan mo, yung net of non-current liabilities. Tapos may kita mo yung cash here. So look at the cash here. As of December 31, 2021, cash here is about 1.67 billion. Short-term investments is 1 billion. So pag tingnan mo yung recent first half 2022, 3 plus 1 to 2.9 plus 1. So that's about 3.9 billion. We're talking about a 3.9 billion and they're going to receive 600 million here. They've got a ton of merchandise inventories, a lot of assets. So most of their total current assets, indeed, 10 billion current assets is, as I said, 2.5 times higher than their liabilities. So their total non-current liabilities, total current liabilities. So current ratio, 10 divided by 3.8. Kaya mo nakuha yung 2.5. So you've got a lot of cash versus your liabilities. Ito yung mga bayad sa suppliers, trade and other payables, 3.5. Ito yun eh. So merchandise inventories and then trade and other payables, 3.5. This is manageable, So mataas yung current ratio actually. They've got a ton of cash, 2.5 times yung current ratio. Most of their non-current liabilities are usually for their obligations in the future. Pag sinabing non-current, that is 10 years, matagal pa to. So you shouldn't actually worry too much about this, given they have adequate cash flows. So adequate cash flows, how do we say that? Let's take a look at their cash flows from operations. So income, 300 million. Depreciation, 300 million. Finance costs, their interest expense, 250 million. Depreciation of assets, 185. Retirement benefits, 30 million. Some forex losses or something, that's 26. Malamang this is a dollar exchange if ever may imported. Okay, and operating income balloons from about 575 to 1 billion. So that's a huge jump, That's a huge jump of their operating income. Now, in terms of all of their contract receivables, inventories, etc., cash flows provided by operations is now at 300 million. So malaki talaga yung cash flows versus 2021. From negative 800 to 300 million. And then you get a lot of mga interest pa and all that. So total cash by operations, 263 million. This is very important. And this just in just 6 months pa lang to. 6 months of 2022. If you add all the investing activities and the financing that they can get from loans, you can see 2.5 billion peso proceed from loans, repayment of loans, 1 billion, purchase of treasury stock. So ito yung 75 million. So they bought shares. When you're buying shares from the market, that is the purchase of treasury stocks, guys. So bumibili si Mrs. G ng mga stock ownership from the market at 1.45 below. And we can see that even if they do that, they still have a ton of cash. So they can actually increase their buybacks for the next 6 months and walang adequate change na detrimental for the business. So the way I see it, looks like Mrs. G is just simply a company that is growing and recovering and should adequately be paid after, say, 6 months or a year. So you might want to see this company recover. Take note that if the company recovers back from about 4 billion today to as much as 8 billion, then you are seeing that the company, not just 8 billion market cap, but even 10 billion, then that means you're going to make a return, something in the realm of 25% CAGR for the next 3 to 4 years. And that is actually very high return. So just a buy and hold format. Take note also that they've been expanding and it has been happening. So since IPO, 50 stores, went 52, 53, 57, tapos ngayon 63 in 2022. I do believe that they are building it correctly and properly. So they're expanding without much aggressiveness from their cash flows. So maayos yung expansion plan. So I think this one is worth your while. Ito yon, okay? So especially when the economy recovers, something in the I know that there's a recession, that is an obvious problem. But the way that the pricing here means na naka-priced in din yung recession. The fact that we are just assuming flat, zero growth despite increased number of stores. And we're not even assuming a 1 billion peso income profit. Guys, we're just saying that the income is about roughly 500 million, half of their prior income during prior pandemic. So it looks like really something interesting. Okay, the next question, the next thing that is an anomaly that I've been uncovering in the Philippines is PNB. So I shared it as well. So if you're new here, you can follow me in my Physis Trader. This is my profile, Physis Trader, at Physis Trader. Please follow me here. Also like and subscribe. You can see that there are some anomalies. One anomaly that we can see in the Philippines, so here, I've already shared the total buyback program is 300 million pesos approved. And I would assume that this outstanding shares will keep on being reduced. Your treasury shares will be increased. And over time, this would be a high earnings per share. So the market will revalue this afterwards. So ito rin, kitang-kita naman, the stock price has not recovered since the pandemic, even if the actual sales and the actual income has already recovered from a loss. Okay, so one other anomaly, last but not the least, is PNB. Let's talk about PNB here first. So can you believe this? If you just simply look at the PE ratio, it says here that PNB at about 18 pesos with a trailing earnings per share of 14 pesos is roughly trading at a PE ratio of 1. So we know that all the banks are cheap, but this is an amazing value in terms of the cheapness or distressed asset valuation. So why do you think PNB trades at this lavish discount? Okay, maybe the Lucio Tan Group indeed must make a merger. So it says here that the book value, if you take a look at the PNB, says PNB is one of the country's largest private universal banks in terms of assets, loans, and deposits. In the Philippines, they've got 650 branches nationwide and 1,728 ATMs. It has the most extensive international reach with 71 overseas branches, representative offices, remittance centers, subsidiaries across Asia, Europe, Middle East, and North America. They've already been here in the Philippines for over a century, looking forward to more years of customer first. So matagal na tong business na to. You can see that 1980s, so 1916 established, served as the de facto central bank of the Philippines until 1946. Became the first universal bank in 1980s, privatized, reduced government ownership to 45%, 1989 to 1996. Lusiatan Group acquired 35% in 1999. Lusiatan Group becomes the single biggest private shareholder of PNB 22 years ago. The joint sale of government and Lusiatan Group shares year 2005, full privatization after a follow-on equity offering 2007. Merger with Allied Bank 2013. They had a stock rights offering 11 billion pesos here 2014. Another $150 million loan in 2015. 2018, $300 million senior notes. 2019, a syndicated loan, $250 million, and a maiden peso bond offering reaching 14 billion. Again, in 2019, they made a stock rights offering, raising 12 billion, with an issuance of about $750 million notes to be drawn down through the $2 billion medium-term note program. So how is PNB able to borrow so much in bonds, and yet the Philippine common shares are basically treated as penny stock? So PNB net income is 11 billion pesos, lower gains due to the properties for share swap with PNB Holdings. By the way, in PNB, they said that they will offer the property divs for those who held the company shares in 2021. Without this one-off transaction, net income would have increased significantly due to the improved net interest income and gains on the ROPA sale, complemented by reversal in credit provision. So this was related to the property. Total assets continue to be high. You can see that it's 1.1 trillion, and this was increased by liquid placements despite reduction in loans. So typically, if you have 1.1 trillion of asset, you can see that it has, even at 1%, then you can already earn that 10 billion pesos. Okay, so let's go through there. I will not have enough time here, but we can see that it seems that PNB is trading at an 85% discount from its peak, and it has never been this low since it is listed. So look at the monthly first. So PNB here, 2005, traded, well, of course, sorry, hindi naman talaga siya listed 2005, no? Kasi meron siya year 1919, 1990s pa. So, but either way, no? We can see that this was, even if my chart here only goes back to 2005, we can see that since the crisis happened, yes, it fell here to about 10 pesos, rallied to 110, and now back to 18 pesos. So I'd say that from 2008 till 2020, 2022, that's about 14 years. If we are to believe that the companies, sorry, nag-share ba ako ng screen? Hindi ko pala na-share kanina, no? Sorry, I've been reading a lot, but I wasn't sharing my screen. Either way, we can clearly see here that there is an undervaluation in the Philippine market. And I think this has to do with the fact that they are small companies, small caps. So small caps, generally speaking, don't get a lot of coverage. One reason why they remain illiquid. But we would argue na as time goes by, two things could happen. A potential catalyst would be, yes, the property dividends. That being shown to the market would be a positive bump perhaps for PNB. And another thing that could probably re-rate PNB is any talks of a merger. So we've already seen that PNB has been approached by several banks in the past. That's the reason why it rose to as high as 100 pesos, owing to their book value being 110 pesos per share. If in fact that the company may be interested in a merger sometime in the next 5 to 10 years, we're not saying that it will happen within the year, given the undervaluation of the bank and a lot of banks in the Philippines wanting to grow. We've seen the Union Bank and the Citibank asset merger deal happen this last year that happened. Most likely, banks could be approached for this distressed valuation. I'm not sure if this distressed valuation will happen to be finished, but one thing that the company can also do is provide a dividend. Other than the property dividend that they gave last year, although TBA pa rin to be announced, one thing that PNB can do to re-rate the business is perhaps to sell. So a lot of people are saying that PNB has been married to that law due to the family feud, or who's gonna run PNB and who's gonna succeed. I think that with family feuds, because of those intricate problems, most likely the best way to go is for a merger to happen wherein they receive cash and shares. So far, magulo yung family feud, I believe, which is really the one cause of the miring one of the reasons why this company may be trading at these levels of valuation. So usually there's always a reason why a company is trading 80% below or 90% below. Other people may have more reasons to understand why it is trading that low. But it seems to me more like an aberration. So yun lang. See you again in the next week. And salamat for watching. Awesome 10X Philippine Market Update. Thank you, and that's it. Bye-bye.